Do you want to transfer properties out of your name to the trust or a company? Because you might be wondering, is it feasible or is it a good idea? That is typical question that I get from people coming to me and say, Shiliboy, I want to transfer all my wealth to the trust or to a company. And each person have different reasons why they want to do that. Others, they want to protect their wealth should they divorce. Others, they want to protect should they be sued. Others want to protect should their business ventures goes wrong so that they don't lose what they have. Other people wants to preserve the assets for their loved ones, minor children, and all their beneficiaries that they could identify. That's one of the reasons why people then will want to transfer these assets to their trust or a company. But there are certain things that I always want you to bear in mind before you transfer these assets. First of all, is tax consequences. What do I mean? First of all, you must look at this current state when you are having these properties that are generating income in your name or any other form of assets that generates income in your name. What are the tax implications currently? How much of a tax are you paying versus to what you're going to pay if you're to move these assets in any other form of legal entity? That is key. I think another thing that you need to be mindful of is the usage, the nature of the usage of the future assets. Is it going to be VAT consequences on that? Or currently, what are you going to do? So, those are some of the things that you need to be mindful of. Okay. But equally so, you need to be mindful of the tax consequences of transferring these assets, be it transfer duty, be it capital gain taxes. How do you go about rolling over those so that you don't pay them? That is one important consideration also. But equally so, you need to understand, are these assets actually making profit right now or not? Those are some of the things that you need to be mindful, because the cost of transferring these assets versus the what you're going to save by going into another legal entity needs to make sense. Also, you need to be mindful of consultant costs. You're going to have to involve transferring attorneys for these assets, or if there's business assets that you want to transfer, you will want to involve commercial lawyers and also tax experts in both scenarios. So that is very, very important to be mindful of those cost consequences. But equally so, you need to be mindful of the tax consequence or even the cost of managing those structures that you're going to be forming. If you're going to then form a trust, what are the cost implications for managing that particular trust? Be mindful of that. Another thing that I feel that people also tend not to think about is the other assets that could be actually moving into those structures. Because you may find that you want to transfer a couple of properties that you have in your name, but you're forgetting that you've got life policies at work, they're giving you guys shares. You've got other crooked other people do crooked investing, and you could potentially move those assets in the trust, right? Yes, you can, right? You can make a trust beneficiary of other investment policies that you have. Most people don't really consider things like that, and that thing can actually help and speed up the winding up of a disease estate upon your passing, so that the loved one's life is not actually interrupted upon your passing. So these are some of the things that you need to be mindful of. Guys, again, please make sure that when you do your trust administration, you do it properly. What do I mean? Make sure that you attend meetings, make sure that you are mindful of tax submissions, returns, and all requirements that has to do with trust. Make sure that you are compliant with that. Also, make sure that the Master of the High Court compliance requirement are actually met. That will actually protect you from what we call an alter ego trust, because it's pointless to have a trust but you don't respect it, you don't actually administer it efficiently. So that is why it's important. And that's why it's so important to have what you call professional trustee, which is a requirement that for you to form a trust, a family business trust, you need to have what you call an independent trustee. These are people like myself who professionally specialize being trustees, who understand how trust works, who can put all aspects that are necessary within the trust to help you to manage that trust, be it employee share scheme trust in your companies that you are forming to incentivize your employees. We can help you to put it together and also making sure that it's run properly, efficiently, so that there are no employee issues within your corporates. Also, we are professionally. We can even actually manage your family trust to make sure that all the investment, do financial planning, investing in the right assets. We can guide you on that particular thing. So that's why it's so important to leverage forming a trust, so that it bring professionals who knows what they're doing. And the beauty with forming a living trust is the fact that these things, you are able to see this vehicle working when you're still alive. Unlike when someone is forming a testamentary trust, you're not sure if those people that you nominated as going to be trustees will actually run this trust efficiently. So these are some of the things that I think you must be mindful of when you're reaching out to people like me wanting to do consultations, or you're reaching to other experts that are in the fiduciary services. So just be mindful of that. And then all the best. My name is Shirley Boy, tax and fiduciary specialist. All the best. And yeah, I'm your go-to guy when it comes to tax and fiduciary services. Good luck.